What's up, everybody? Welcome back to another episode of the Halving Report podcast. I am your host, Brad Mines. The price of Bitcoin is $29.3 thousand US, and there's only about 37 weeks left until the next Bitcoin halving. Today, we welcome Joe Endoso onto the show. Joe is the COO of Linqto platform. Linqto helps regular investors like you and I invest early into companies that have yet to go public. It's the first and only trading platform for shares of private companies that I am aware of. This was a very candid and interesting interview with Joe Endoso. So without further ado, everybody, welcome Joe to the show. Joe, welcome to the Halving Report podcast. Thanks for doing this tonight.
Oh, it's my pleasure. A privilege, actually, because you put out a good show, Brad.
I much appreciate that. We learn a little bit every day in every episode that we do here, Joe. So you'll be our 91st episode. I was hoping you could just kick things off with us by sharing a little bit about your journey. From founding of Redbridge Group to becoming the COO at Linqto. What's the most unexpected twist you've had in your career so far?
Oh gosh, I think it probably was my decision to become an entrepreneur, not in investment banking, because I started two little banking firms, little investment banking boutiques after I left work for one of the largest firms in the world. But all that was investment banking. But around the 2015 period, I started getting really interested in FinTech and in crypto. And in 2016, I left my last banking firm, which is, by the way, still around in Washington, D.C. It's called Envera Capital, and left to do a startup in crypto. And I took that company, which is still around today. It's called Bosonic Digital, through 3 rounds of funding, and left for a variety of reasons, having mostly to do with the fact that I thought we were a little early with our product into the market, to go work on Linqto, which, after I met the founder and we discussed the vision for the company, I felt in contrast was something that was absolutely perfectly timed for the market. And I can tell you that based on our experience since we launched the investing platform in February of 2020, everything is proven out according to that thesis.
Yeah, it's a very interesting thesis. You guys offer the ability to invest in companies that have not gone public yet. It's a very great opportunity for retail investors and something that's definitely piqued my interest. Is this just available to Americans at this time?
No, a little over 15% of our business is done outside of the U.S. And, a good number of those foreign customers are actually from your home country, Canada. Yeah,
well, I may be the next one here, Joe.
Oh, that'd be great. I would love to have you as a member of our community.
Yeah, for sure. Very interesting, and particularly interesting with what's going on in Ripple. With Ripple, that's one of the companies that you are to invest in for retail investors. Is that right?
Yes, absolutely right. We have invested in Ripple and maybe another, call it 15 or so other companies in the digital asset space. And a lot of that was born of the conviction that I had from my years in crypto, that this is a very foundational technology that will have very long-lasting implications on many of the world's largest industries, including finance. So we've invested in Ripple and these other companies on that basis, and I'm very glad and heartened that a good number of our investment community believe as we do in the promise of that space and in the companies in that space, and so they've also invested and supported us in those investments.
Great. And is there a minimum investment that is required on Linqto?
So today that minimum is $5,000. When we launched the platform, Brad, it was $10,000. But as we began to scale, we were able to get our unit costs down. And we decided that if our mission is to democratize access into the space, then the affordability of investments is one of the key things we've got to address. So we dropped from 10,000 to 5,000, and today we're allowing our newest customers, people that come in and make their first investment, to make their first investment at 2,500. So
Wow.
even lower. And I have no doubt that in the future, as again, we continue to scale and our unit costs go down even more, we'll drop all the investments across the platform at any time for anyone to $2,500.
Wow, that's very impressive. You guys have come a long way then since the start of that, and again, that's a big step to democratize investments. So very interesting, very interesting. I want to jump back to your original startup in the space, and what was the product that you guys had there?
You're talking about Bosonic, the company before Linqto.
Yes.
So we were building a specialized trading platform that would address the need, particularly of regulated institutions like banks and public hedge funds and the like, to be able to trade crypto on the one hand in a very high frequency manner, meaning very, very, very rapid transaction times at very, very large volumes of transactions, but without the need to go through the traditional means of basically mitigating counterparty risks, right? And you can do that through blockchain and the ability to settle transactions very rapidly through atomic settlements. So that was the basic premise of that. It was a highly sophisticated institutional trading platform.
Right, and for you personally, did you like cryptocurrencies, blockchain, like the value proposition to you? Like, was that financial payments, quick payments, or do you have a larger vision for it, like store of wealth, global reserve asset? What are your thoughts around that?
I think it's all of those things, and obviously not every blockchain and every native token is going to meet all of those requirements, right? I think that, it's like in the traditional finance world, when you come up with financial instruments, there are trade-offs. And those are typically risk-reward trade-offs, but there are also trade-offs in terms of capabilities. So in order to get a certain capability, you give up on something else that's not as important. It's no different in the blockchain world. And so, yes, I mean, if you, for example, you looked at Bitcoin, it's just its resilience over several market cycles and over a long span of time have made it quite obvious what its qualities are as a store of value, right? On the other hand, if you look at the hash rates on that blockchain, it's probably not the best infrastructure on which to build, low latency, high frequency trading. That's something you need different kinds of blockchains for that. So that doesn't mean that one is good and one is bad. It just means that you've got to understand what your use case is and then build appropriately on the right chain using the right, token. And so in the traditional finance world, it's no different, right? There are very many different kinds of companies addressing a whole slew of different kinds of problems in our world. And depending on what the problem is, you find the right company and the right product and service that addresses it.
And you've worked, like we were saying earlier, you've worked in a diverse, a lot of diverse locations. Is there any experiences you had throughout your career that were more memorable, maybe cultural experiences or something amusing in any of the cities that you worked in?
I got more than my fair share of war stories, because thing is, as an investment banker, which is what I've done for most of my professional life, Brad, you get to go to so many places and encounter so many different kinds of people. So I probably could write a whole book on that. I will tell you that
maybe you should.
I'll tell you one of the more interesting things, that it wasn't a single incident as much as a period and a series of decisions, right, that undergirded that whole thing was going to the Middle East. when you're working in banking and in capital markets, those are businesses that are very, very driven by the largest, capital markets in the world, which are principally here in the States, and then secondarily in the developed parts of Europe and Asia, right? But the Middle East isn't part of that mix. But when I started my first boutique banking firm in the 2000s, one of the founding premises was that there were emerging markets out there outside of that triumvirate that I just described of North America and Western Europe and the developed parts of Asia. There were markets outside of that for a variety of reasons would become strategically very important in global markets, and that we had an opportunity as a fledgling firm to go into those markets really early, establish relationships and networks, and begin doing transactions, that nobody else was willing to do. And that thought process in its execution took me to the Middle East, and specifically to the Arabian Gulf. I made my first trip to Dubai in 2000. It was a long, long time ago. I remember, getting on the plane for that first trip, and I'd say 90% of my friends were worried that I was not coming back because they thought terrorists would break my hotel room down and hold me up for ransom. I mean, I'm not kidding you. People actually said that, right? Said that was what was going to happen to me.
And that was before 9/11, right?
Oh, yeah. And then 9/11 happened. After that, it was like game over. You shouldn't, you got to be nuts. But you fast forward to where we are today, right? And, nobody asks me anymore where Dubai is or what Dubai is. They don't ask me how to spell the word. And when I go there in November to attend Ripple's Swell Conference, everybody and their brother that is playing an important role in the world's financial and crypto markets will be there, right? That's the nature, the positive nature of change. And that was a city-state that undertook that kind of transformation. And we have, with the various technologies that we are, investing in at Linqto with our members, the ability also to participate in that kind of exciting and transformative change. And in many cases, be able to see the impact, the results of those changes within our lifetimes.
Yeah, Dubai is one of those places making, very quick change and kind of put itself on the map very quickly. And like you said, there's not a lot of questioning around it, and it's kind of a positive thing to me because you see a lot of bad news out there, but the way you just described how people are different now and have a different attitude and culture, I guess that's part of the world being more globalized. And as time goes on, I guess the world's getting a little bit smaller and smaller, but it's good. It's good to have a global culture. It's good to see that sort of development happen really quick. Did you have any, real nail biter deals that throughout your career, and how would you celebrate after?
One of those deals was a deal that we closed literally on Easter Sunday, which is a work day in the Middle East, by the way, right? So they have a work week where the weekend at the time was Friday and Saturday, and then Sunday was the first day of the work week. So it was a work week. We're on a beach in Dubai, and agreed terms, and then went back into the hotel and signed documents for a transaction. So I was at that time a semiconductor investment banker, covering an industry that now has gotten increasingly important because of the advent of generative AI and the requirement within that sector for massive amounts of computing power, right? Which, a new generation of chips that have been engineered to meet that very specific need are now coming to the forefront, and we're invested in that space and in those chips as well. But long story short, one of the really exciting things about that foray into that part of the world was being involved with governments and some of the large financial institutions in the region in this project to help them diversify their economies outside of oil and gas, which had been, still are the main sources of their wealth. But because you had a generation of leadership coming to the fore in those countries, we're thinking really long term, right? They were saying, unless we reinvest this oil and gas wealth into other industries that are going to remain even after the oil and gas run out, we're going to basically seal the demise of our nations. So we ought to figure out what some of those other industries are. And we were able to convince a bunch of those folks that semiconductors was one of those industries. And so if you track the progress of the sovereign wealth funds, particularly of the UAE, so Dubai, Abu Dhabi, which are the two largest and wealthiest emirates in the UAE, you will see that in that period they started investing heavily in the technology sector and in semiconductors. And that is a trend that continues to this day. And if you look at AMD, for example, all of their chip fabs today are owned by an entity that is the technology investment arm of the sovereign wealth fund of Abu Dhabi. So I got to see that whole train of progress, right, start at the station in those days. And I hope that I was able to play at least a small part in that train out of that station on that track.
Very interesting. Moving to your role at Linqto, what are your primary responsibilities, and how are you bringing your past experiences into play? What's the most exciting thing you're working on right now?
Well, every day there's about 20 exciting things happening because, like every startup, right, you're trying to forge new directions in every which way. Some of which work, some of which don't. But then you pivot very quickly from based on the learnings of this stuff that didn't work, and then you also try to consolidate the gains on the stuff that is working and try to move the company forward. So, my job is to basically work with our founder, who's the CEO as well of the company today, in terms of just shaping the direction of the company, while also making sure that our day-to-day operations are running, smoothly, and we're continuing to make progress in terms of some of our key goals. And those key goals are largely all revolved around growth, right? And growth is important because this is a play that's fundamentally about addressing a market where there has been very, very little participation by regular individuals like you and me. Meaning that even though investing in private tech companies has been around for decades, and it's frankly been the kind of investment that has generated the best returns in that same period of time of any asset class. The sad reality is that all of that investing, and therefore all of the gains, all the wealth that got created through that investing, was largely the monopoly of institutions. Venture capital funds, private equity funds, sovereign wealth funds, pension funds, but not regular people like you and me. And this is what gets me up in the morning. What excites me is this notion that we are now bringing in people and people's capital into a market that for the longest time hasn't had those parties and their capital participate in it. Right? That the opening up of that is, and the opportunity is massive because there are tens of millions, and that one estimate places that number close to 100 million. There are close to 100 million accredited investors in the world today who control collectively over 73 trillion in wealth. right? So Linqto is about trying to get a small portion of those very big numbers of people and capital into this private market. And this private market, by the way, is also large, right? The investable universe is very large. There are today, probably over 5,000 VC-funded tech companies around the world that are, worth a darn. And over 1,300 of those already today have valuations of $1 billion or more. Right, that's the investable universe. Those unicorns of roughly 1,300 have a collective market value in the private market, Brad. That's about 1.5, or actually it's about 2 trillion today.
Yeah, I mean the potential it's a no-brainer to me, Joe. I guess my question is how does it work in terms in comparison to buying and selling a stock? Like if I go on Linqto's website, I sign up, I buy $2,500 or $5,000 worth. What do I get, and can I go ahead and sell those back, or am I kind of in it until it goes public? How does that work?
Yeah, that's a really good question. So what's happening when you invest? Say you're, our newest customer, Brad. You come, so you get to make your first investment for $2,500 is all, right? Your $2,500 buys you a share of an investment vehicle that we manage and that holds stock in that company that you invest in. So let's say you invest in, the company you'd mentioned earlier, Ripple. There's an investment vehicle that owns Ripple stock, and you become a pro rata owner of that vehicle to the tune of your $2,500, right? And when Ripple eventually goes public, we come and say, Brad, do you want to just have us pay you cash after we sell that Ripple stock in the public market and realize your gain that way? Or do you actually just want to hold the Ripple stock and decide yourself what you want to do with it, right? And if you choose the latter, we'll send the stock to your brokerage account. If you choose the former, we'll sell your Ripple stock and send the cash to your bank account. So that's how it works. But here's the beauty of it. That pro rata share of the investment vehicle that you own for your $2,500 is liquid. What does it mean? What that means is that if you decide, for whatever reason, you no longer want to wait for that Ripple IPO because you need the money, or you want to invest your $2,500 in something else on our platform, you can sell that investment to other members or to us. And we'll give you the value of that. And by the way, that value changes because on our platform there is a market, so people are buying and selling Ripple, right? So that price is going up, it's going down. We've had many people take their gains on Ripple because they were able to buy Ripple sometime back at a lower price, and they've been able to take gains on it. Sometimes people come in and they take gains based purely on arbitrage, meaning I buy Ripple this week and I sell it 2 weeks later because the price has gone up. Right. So all of those things are things that you can do and can't be done on any other platform for that type of investment.
So there's no competition in this space for you guys right now?
Not in the manner that you're able to transact or hold your investment, and certainly not for the small increments that we're talking about. Yes.
Wow. Well, yeah, like I said, it sounds like quite the opportunity, Joe. When I came across your profile and your company, I was genuinely interested, and that I'm glad to hear that it's open for all Canadians, and all my listeners up here in Canada can have that opportunity that was never there in the past for them. So very, very interesting. Just a quick break from crypto and business, Joe. What do you like to do on your spare time?
I used to be into running a lot. I used to play in a soccer, pickup soccer kind of a league. I've given a lot of that up as we've, just become more intensely involved in building up Linqto. So today, I'll do that occasionally, but actually what's easier to do is probably, I don't know, pick up a guitar and strum a couple of tunes, or pick up a good book and read it. So quieter pursuits that are easier to do from off of my chair here in front of the computer.
Yeah, awesome, man. Are you reading anything good right now, or do you read any or many Bitcoin or crypto books?
I haven't. I read a primer on blockchain technology years ago. I can't say I've read anything on that anytime recently. Is there something you'd recommend to me, Brad, that's good?
Oh, absolutely. I have a little bit of a collection behind me here. I'm not sure you can see a little bit down here. I have.
You can make out the titles.
Yeah, Bitcoin Billionaires is a good one. That's about the Winklevoss twins and their entry and journey into the space. I'm lucky enough to have a signed copy of that behind me. I also have, let's see, I do have The Bitcoin Widow, which is the wife of Jerry Cotton. If you've heard of Quadriga X, that was the big exchange that went down in Canada. Hundreds of millions kind of lost there for Canadian investors, unfortunately.
That's really, that is so cool. Do you have any books there about, so one of the most interesting guys, and I think still one of the guys I look up to in the space is Novo, Mike Novogratz.
Yes.
And Novo's company is actually listed up there in Canada on the Toronto Stock Exchange, as you probably know. But he was one of those guys that was very, very early into Bitcoin and crypto. He came out of investment banking and asset management, and I think what he's doing in terms of setting up an investment bank and an asset management firm that's pure play, focused on the digital asset space is genius. And so I think if nobody's yet written a book about him, somebody ought to, because I think in the long span of history, he's going to be one of those early pioneers that we're going to look at. And I find it particularly interesting, right? Because unlike very many of the people that have helped that space mature and grow, Novo's primarily not a technologist, right? Most of the people they're engineers and people that have that kind of a technological background. But Novo's a banker and an investor. So somebody that has, background that's more like me. And so I find him particularly inspirational in that respect.
Yeah, it's definitely, inspiring to see people like yourself in the space. Not everybody comes from the same background. And I like to say that cryptocurrency and Bitcoin is very multidisciplinary, and people come from and get motivated by it from all different walks of life. I guess the other two I would say that were kind of low key, really really good for me to learn about was the Block Size Wars. That book was quite interesting because I came into the space in 2017, and so I kind of was just at the tail end of the Block Size Wars. And then The Seventh Property by Eric Yakes is about this new property that Bitcoin possesses of immutability. And I guess that would be a
really intriguing book. What is it called? I'm going to take that down.
Yeah,
The Seventh Property.
Yeah, The Seventh Property by Eric Yakes. And yeah, very, very interested and underrated book in the space for sure. Yeah, definitely check them out, man. And there's lots of good stuff in this space. I'm sort of addicted to the Bitcoin and crypto material.
Well, good for you. I mean,
yeah.
You've become an expert just because of the discipline of your reading and your study. Plus, you get to speak to a lot of people that are in the know. So I'm sure you've accumulated a lot of knowledge. I mean, I was actually looking at the title of your podcast, Brad, and I was curious to get your personal views on how you think, the Bitcoin market is going to react to the halving event that's coming up next year. I mean, we've had 3 so far, and, is history going to be a good indicator of what will happen this time around? What's going to be the same? What's not going to be the same, do you think?
Yeah, that's a great question, and often a question I like to ask my guests, but now you've flipped it around on me here.
Oh, were you going to ask me that?
I usually ask my guests about...
Give me a better answer than I can give you, my friend.
Yeah. So I mean, I'm forever bullish, and I think hence the name of my podcast, the Halving Report. I always put in my description, always counting down the days until the next Bitcoin halving, and that's just because I feel like as a normal person, dollar cost averaging into Bitcoin, I think looking forward to the next halving is always exciting if you think those supply and demand economics are going to take effect like they do have in the past. I do believe that it'll be less impactful than the past halving. However, we're also getting a whole lot of new players into the space, institutional money, nation state money. So it could be, I'm like at minimum, I see like a double, triple, quad, like in that range of price, and not from the current, but in terms of price, I would say 120 to $140,000 would be, I think, reasonable to say. And that's just kind of based on me asking other people. My last guest, he thought a conservative number would be like from $103,000 to $110,000 per Bitcoin.
Wow.
He's much more bullish on Ethereum with just more utility. He says like $8,000. And that's just my last guess. He's got a pretty good, pretty big YouTube channel called Dollar Cost Crypto, and he's got his ear pretty close to the ground. He's an interesting fellow, but I definitely think the halving will always have some sort of effect and kind of push people to act in a certain way. So I'm certainly bullish. Do you agree, or what are your thoughts initially?
The truth is, I don't think I know enough, Brad, to be able to make as educated a guess as you. What is interesting to me about what you said, two things. One is that the kind of price appreciation you're talking about is more reminiscent of the very first halving of 2012, right? We certainly didn't see that same level of pickup that you're describing in the next two halvings. So that's one. That is interesting to me, and I'm curious why you would think, or the people that told you that would think that. And then the second is this bit about Ethereum is going to react in this fashion. That is also quite interesting to me, that there's going to be this a significant impact. I mean, I think it's quite clear when you look at technical charts and correlations, right, how tight at the end of the day every other coin is tied to Bitcoin. And so if you had a significant spike in Bitcoin, I assume that is what that person is basically basing their Ethereum prediction on, their ETH prediction on.
I should clarify that we were talking next bull run, not just the halving per se. I don't think. Okay. Yeah, sorry. I mean, like, I'm talking like 6 to 8 months post halving. I think we'll start to see those supply and demand economics kind of kick in. We were kind of talking next bull run, but not just the halving per se. That I think the halving will be sort of buy the rumor, sell the news a little bit. I think we saw that a little bit last time, and but I think in the long term it'll definitely push the price up as we see more users come in, more people see a use case for it. To clarify that a little bit.
My general view is that as the ecosystems and the token holder base for all of these tokens, including Bitcoin, grow, not just in number, but in diversity, meaning more different kinds of holders as opposed to just retail holders, more institutional and different kinds of institutions. And even within retail, there is diversification. There's the early adopters, but now more and more mainstream people are starting to hold coin, right? All of those changes together have a far greater impact on long-term price and price stability than mere events that are unique to a particular blockchain like halving. I think halving is much more impactful in the very early days of Bitcoin than it is as it matures. And the same is true of any other blockchain ecosystem, right? So I think that part is good. That part is it's a good sign, actually, that in my view, it's a sign of market evolution and maturity, that the halving an event in and of itself doesn't have that much of an impact. It's more of these other things we just talked about.
Like you said, it's becomes more stable over time. They shouldn't have these as big as swings. You know, we shouldn't be dropping 75% from the bear market to I mean, if we want something that's, you know, store value or method of exchange, you know, people see Bitcoin as different things, so people have different goals within the community, I suppose. But I would agree with what you just said there. Joe, what would you give an aspiring entrepreneur looking to enter FinTech?
What would I give other than capital, which is what they probably want the most?
Yeah. What advice would you give them?
I would tell them to be a happy warrior, because if you want to succeed in any entrepreneurial venture, never mind just FinTech, right? I think you've got to have those qualities. So the warrior part has to do with resilience and the ability to basically fight through the battles and not give up ever, right? Just keep on getting up after you've been knocked down. And believe me, you will get knocked down. You'll actually get knocked down more before you succeed. Because actually the success is in many respects a function of all the things you learned by getting knocked down. And then the happy part it has to do with having a certain level of internal calm, I guess, because that's how you're able to weather all the ups and downs and the challenges, right? Because if you turn on other people and you turn on yourself, you're not going to be able to withstand all the ups and downs and get to the success part of that.
That's really good advice. Just jumping back to Linqto, I wanted to ask you, like, I brought up Ripple just, you know, because but you said, you know, you're dealing with a few other companies in the cryptocurrency space. Is there, I'm not sure if you're allowed to talk about it, but, you know, is there something internally you guys are seeing? Is there one company that's kind of getting more attention than others?
I mean, on our platform, we've invested in, I think, 16 or so. And I would say that if I looked at those 16, there's probably, you know, 4 that probably captivate our audience more than others. I don't necessarily think that that's by itself or in and of itself an indicator of the meaningfulness of those companies in the broader sense, because all of them, in my view, are great companies and meaningful, else we wouldn't have invested in them, right? So, you know, popularity doesn't 100% equate to relevance or importance. I do think that for all of these companies, it's going to be an exciting period of time. I mean, you can get bogged down in crypto winter, and I tell people that are new to the space, newly invested in the equity of companies as well as tokens in the space, to take the long view, because we are in very, very early days yet in the evolution of this technology, and we have hardly seen the impact of this technology show itself in a lot of traditional industries, which is where a lot of disruption will happen, right? You know, so when that happens, you're going to see an explosive growth in the value of the equities of these companies, as well as in the native tokens that are attached to the blockchain systems that are going to persist. And of course, there will be losers too. It's like in any market. Not every blockchain will survive long term. Not every token will survive long term. Not every company in this vertical will survive long term. So we're trying to pick the winners and avoid the losers. But it's like anything, right? You don't have a crystal ball. We're not perfect. I mean, we've got a bunch of companies that, you know, if you went there today, you'll see that hopefully agree with us that they're going to be winners. But we've also invested in companies that have proven to be disappointments. I won't mention names, but we invested in one particular digital asset company that not only didn't fulfill its promise in terms of earning us the returns we thought we would, it actually went bust, right? And we lost money on it. We lost more money on it than our customers did, because when we started seeing things become a little funky and potentially heading south, Brad, what we did was we just stopped taking subscriptions into that investment vehicle. So we were holding a big position on our books. And when the the brown stuff finally hit the fan and the party and the music stopped, we were holding a much bigger bag than our members would invested in it. Our bag was probably 5 times bigger than our investors combined. But we did the right thing. We did the right thing in the sense, not obviously the right thing would have been to avoid that investment. We weren't smart enough to do that, unfortunately. But having made it, we did the right thing by preventing our members from losing more once we had a sense that things were going south. And we just took that upon ourselves to absorb the remainder loss. And I hope that from our members, that gives them comfort, right? That when they deal with Linqto, they're not just dealing with a company that is bent on churning their transactions, making money off of them, and feeling no sense of allegiance or obligation to them. That our business model aligns us very, very intimately with them, because our capital is always at risk, and it actually is at risk before our customers, because we're buying all the stock first, and then our customers are free to participate with us or not after we've already made the investment. Right?
Yes,
so
definitely.
That aligns our interests with theirs.
Yeah, definitely a better long-term play to retain your customers that way and protect them and kind of own up to your own mistakes as well. So very, very admirable. Does it take much to get signed up on your website?
It's super easy and fast, because we've developed some of the best technology to do that. So it's highly automated. We can get you onboarded and go through your AML KYC in minutes. And then we've got to qualify you as an accredited investor based on your home country's requirements. So if you're a Canuck, we apply the Canadian regs, which, by the way, are pretty similar to the U.S. regs, except obviously they're denominated in Canadian dollars. And then once we do that, you're ready to go. And then you literally click to invest. You can look up the various companies. We've got a fair amount of information and research on each of those companies so that you can educate yourself, get comfortable with the investment you're making. And once you make the investment selections, you just click and you're done.
Yeah, super exciting. I'm excited to go check it out, Joe. As we wrap up the interview, if you could go and have dinner with any historical figure to discuss finance, technology, or anything else, who would it be and why?
Oh, gosh. There are many. I would probably pick, 2 people that are not well known. One guy is a guy named Mankiewicz, who was an academic, a finance professor, and he came up with a theory of efficient frontiers, which is a mathematically sophisticated way of understanding risk versus return in investing. And I think those insights and the manner with which one then constructs portfolios based on that theory of balancing risk and return allow portfolio management theory to really move forward in a positive and modern way. So he would be one guy, Markowitz. And then and the other guy's a practitioner whom I love for his personality and just his track record, and that's the founder of Berkshire Hathaway. He's been a really successful investor, and whether you like him as a person or not, whether you agree with his non-business views or not, the point is that it's hard to match the kind of investment track record that he has, and just for the length of time that he's been able to sustain that kind of earnings return is frankly amazing.
Definitely. And I've seen differing views on Warren Buffett, as he famously said, rat poison squared about Bitcoin a number of years ago.
Exactly.
But
He's bad that way, right? He's very old school. The good thing about him is he knows what he doesn't know, which frankly is 90% of being a good investor.
Yeah.
Is having a level of intellectual humility and knowing what you don't know, right? So he doesn't invest in stuff he doesn't know. He doesn't know, crypto from a rat's backside, right? So,
Right.
but as a result of that, he doesn't invest in it, which is good, right?
Yeah. A lot of people that said a lot of nasty things that have come over to our side now. Seems like one by one they all fall. Except we'll probably won't see that from Warren Buffett. But those are some interesting picks there. Joe, I'm going to thank you for your time tonight. This is awesome to sit down and have a candid conversation with you. You've given me a lot to digest. I'm going to open it up for you if there's anything that we haven't touched upon today that you'd like to. If not, man, just let us know where we can follow you and learn more.
Yeah, come check out www.linqto.com or, just download our app. It's on the Apple Store and the Android Store, and play around with it and start investing in privates because, as I said, it's the asset class that has driven the best returns in the last 30 plus years amongst conventional, investments outside of crypto. And we also have, if you're a crypto enthusiast and believer, a very healthy portfolio of crypto companies. One of our top investments, by the way, is a Canadian company called Dapper Labs that are a leader in building infrastructure as well as specific content in the whole NFT space. And even though, that is a market that has gone through a downdraft, that downdraft really belies what the fundamental potential is in that NFT technology, right? And we're believers in that. And so, check out Linqto, start making your investments, and join our community and become part of this movement to democratize private markets.
Awesome, man. I'm definitely going to check it out. I'm going to have a link below in the show notes for folks to check that out. Thanks, Joe, for coming on to the Halving Report podcast.
You're very welcome, Brad, and I hope I get a chance to meet you in person one of these days.
Well, let's make it happen, man.
All right. Take care, brother. Bye.
See ya. Hey you, thanks for listening to the Halving Report podcast. If you want to support, follow us on your favorite podcast platform and leave us a 5-star rating. Follow us on our socials at Halving Report. If you're Canadian and you want to buy Bitcoin or cryptocurrency for the first time, go to bitbuy.ca/halving for a $20 bonus. If you want to bring it to the next level and take self-custody of your cryptocurrencies, if you want $30 off the ultimate digital asset security device BitFi, go to halvingreport.com/BitFi for more information. Until next time, I'm Brad Mines.